The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Big Iron Auctions, customer satisfaction is our #1 goal. As the 40-year leader in auctions for agriculture, real estate, livestock, construction, and transportation, we are here to serve you. Big Iron will handle everything from start to finish. From meeting with you, to prepping your equipment, writing the listings, and collecting buyer's payments, let us do the heavy lifting for you. We love our customers, and we treat them like family. There's a Big Iron sales rep in your area, so let's get together. To learn more, visit bigiron.com.
In the 21st century, hard-working people working hard for you and me, moving higher, time and time again. Through the years, you'll find us here, moving higher.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. Chip Nellinger is with Blue Reef Agri-Marketing out of Morton, Illinois. Nice stuff to talk about what's happening in the world of commodities. Chip, how you doing, bud?
Hey, doing good, Casey. I'm recovered from the Moving Iron Summit in Nashville earlier this week. That was a good turnout. Always enjoy seeing that group, and I got a chance to speak in front of them, and had a good time, and a lot of great questions from that group too. So it kept me on my toes.
Yeah, they've got some good stuff there, and of course what you're presenting on and where you think the markets are going to go and what that stuff's going to look like is on the forefront of everybody's mind right now, especially what we've seen here. This last week, though, I mean, I tell you what, Trump got elected president, and the world was supposed to end as far as the markets were concerned, and they've done nothing but go up. So, I mean, I guess as you look at this, you think some of this is because we know what field we're playing on now, and then and the other side of it is kind of how regulations and those kind of things kind of favored some of that. But what are your thoughts there? Why do you think this was such a huge move over this last week?
Yeah, we know a lot more now Friday afternoon than we did that day on Tuesday, right?
Yep.
So obviously we have a new president. We had this crop report out today. We had the Federal Reserve in between that drop interest rates 0.25%. We've had some massive moves in these outside markets. The crop report today was definitely friendly, shrinking carryouts, shrinking yields. And you throw that all into the mix, and it's been a wild ride. Immediately after the election, kind of the middle of the night, right about the time it was called for Trump, the bean market was down about 20 cents, and obviously the big fear there is, as you mentioned, the last time, it's not like it's a total unknown, right? We got 4 years of a previous Trump administration to kind of know what the game plan is and the playbook, and so the big fear of the bean market, obviously, are these tariffs in China and what they may or may not do. That the market maybe got ahead of itself because that's, he doesn't take office for 60 days plus 70 days, I guess.
Mm-hmm.
And, we got some weather to get through in South America. And now these yields are shrinking on the crop report. They actually were below the lowest estimate on beans. They dropped them 1.4 bushels today. And that was below the lowest estimate. And we have one more crop. We do have a crop report in December, but they don't do anything with yields. Then we have the final crop report in January. So, are they going to cut more? Is there another bushel and a half to come down? And so it certainly has added a new wrinkle to the grain markets specifically. Funds, there's a lot of money flowing into different commodities and out of different commodities. Stock market new all-time highs. Dollar made a huge move this week. Crude oil kind of had an ugly week. Interest rates, we could do a whole podcast on that. The Federal Reserve over the last 2 months has cut 0.75 of a basis point or 0.75%, but yet the bond market itself, rates are actually going up in the bond market, which is the biggest, most heavily traded market in the world. So I don't know, Casey. This thing is setting up to be a real wild ride going forward. Lots of money. Now that we kind of know Trump's the winner, lots of money being placed as to what a lot of smart people's expectations are about not only the short run, but the next 4+ years. So there's lots of money flowing in and around and out of and into. And there's an argument that commodities, inflation may not be dead, and commodities are a good value. And so I think you're seeing, notwithstanding what is happening in South America or yields here, or it's just buying some commodities just because they're on the cheap side, and grain certainly would fit the bill there. So it was a nice week in the grain markets to the upside. Friendly crop report. Funds look like they want to be on the long side, especially now in corn. I'd say all through the grain markets, the corn market looks the best, but it's shaping up to be a wild end of the year. And then who knows, man? The rocket ship is ignited with hopefully some good things into the new year.
Yep. When you sit back and look at obviously with the pressure we've seen in the past, so we see happening in Brazil, right? You got the delayed planting because of drought situations and what you're seeing there. And then you see a limited supply already coming out from the yields that they didn't get when their first crop came around. When you look at some of the stuff now, you have China saying like, okay, I know what happened last time. We had this whole trade war thing, and it's probably going to happen again. You see a huge boost over the last 2 or 3 weeks where they're getting a lot more exports, booking a lot more exports, those kind of things. Now China's also does a lot of that, and then they also cancel all that stuff too. So I mean, you never know what's going to happen there. But
yeah.
But as you look at it right now, you kind of have to feel that over the next 60 days, anyone that wants to buy some crop out of the United States right now would be the best time to do it, don't you think?
Yeah, especially on corn, but bean demand has been big as well. Now, we're still, as of this week, the corn export pace is about 10% over what the USDA has projected. They did not change demand on corn, surprisingly. There's a lot of evidence on the export side and the ethanol side that would support the USDA having to increase corn demand. We have sold just about 500 million bushels of corn since mid-September. I don't think we've ever done that before. So massive amount of demand on the corn side, and ethanol grind has been hovering right around record. So the story on demand is probably the best in corn. Now beans have caught up for the most part. They're still about 2% down on exports, but then the USDA today did lower bean exports by 25 million bushels. China's been a massive buyer. The question, and you hit this, Casey, is China buying all that in the hopes of shipping it all out ahead of Trump taking office so they can beat the tariffs? Are they, waiting on the Brazil crop? And if it's a big crop, they're going to cancel all those sales. A lot of those sales were for, November, December. So, we're going to know in the next few weeks, based on the weekly shipments, how much is going out to China and how much they're actually taking. And so that's the questions the market has. But to your point, we're about the only game in the world right now, the only game on corn. And demand is big, and countries are stepping up to the plate. We're the only game now in beans until early winter, when Brazil starts having some, their new crop bean supply available to export in the world market. That generally doesn't happen until mid-February and gets pretty heavy through March, April. And so they're just getting kind of towards the back half of their planting, and they've got the entire growing season ahead. So any hiccup in the expected production in Brazil could really ignite our prices here, regardless of what may or may not happen with tariffs. So the demand side is really, really good right now. Probably the best on corn. They're there on beans, but the question is China gonna take all those beans they just bought in the last 6 weeks, or are they going to play the market like they're masterful at doing? And if it looks by January 1st that they're gonna have a big supply in Brazil, they come right back out and cancel all those. And the good thing though is, even with the demand being cut a little bit on beans today, it was 50 million bushels lower on bean demand. We did see the yield cut, and so carryout still shrank. It was 530, I think, and they cut it to 470 million. There was a lot of people fearful that it would be creeping up and eventually up towards 600 million. So it doesn't look like that. That's going to help cushion things in the short run and maybe give us some opportunities to the upside, to let farmers kind of get rid of some of this unpriced inventory at better levels, and maybe even back to some profitable levels based on some pretty good yields out there this year in the United States.
Yep. So right now you're looking at carry out situation in corn right now at 1.9 million and some change. If they do come in, and here's one thing I think this year's going to be a little bit different than years in past, maybe 4 or 5 years, where for the most part, depending on what everyone I talked to for the most part had an incredibly easy harvest cycle this year, where not a lot of weather got in the way. It was good weather. Everything about it was like it should be. It wasn't muddy. It wasn't anything else. It was almost perfect. Well, it was perfect conditions for harvest. So harvest really got done pretty quick. And I guess as you look at this, Chip, as you look out to that January report, do you feel like there could be maybe a little more accuracy than we've seen in the past, just because how fast harvest got done? And then two, if they do come in and drop another, say they drop another bushel an acre on average like that puts you under, almost 1.7 million, just a little tick above that, 1.8 million. As you look at that, what's your thoughts there?
Yeah, I think a couple things, Casey. To your point, fast harvest. I don't have the exact number right in front of me, but so the USDA takes, from the time we plant, they do the planting progress, they do the crop conditions, then they do the harvest progress, and then they do the yield checks. They use the same fields, and then you know, with their projections, they take the actuals. And on the bean number, I think it was historically one of the biggest numbers that they could get on their survey for this November crop report in history. So, they were able to actually get good yield. So part of that, though, part of the reason it was a fast harvest was because it was super dry, which might be why yields are tailing back a little bit. And so usually the trend, they went up in October, they came down in November. It wouldn't be unprecedented, but they usually don't go up in October, down in November, back up in January. To your point, it was an early harvest. A lot of people are done. They had a lot of data to work with. If anything, I think that there's some arguments that it could shrink just a little bit more, just based on the trend and the fact that then by January, they will have all the information. They'll be able to kind of come back and do some double checking. And to me, it says that if anything, it goes down a little bit, steady to a little bit lower. And then to your point, they might have to eventually raise corn demand if they shave another half a bushel out of corn and increase demand by 50, 75 million. You've got not a super bullish, like we're going back to $6 number, but there's no reason to go back to $4 because that carryout's pretty tight. Then you have to play the whole game over of how many acres is Brazil going to plant on their second crop corn that they start planting in February. What weather do they have? If there's any hiccup in that crop, there's a real case for some bullishness in corn. And, if the funds are thinking commodities are cheap, they do a quick survey of the fundamentals. Corn's got to be one of the leaders where they want to put some money on the long side. Especially if yields continue to shrink and demand stays good. So beans are more of a wild card to me. But again, you take another bushel out of them and shrink the carryout down to 400 million when people thought 2 weeks ago that it might hit 600 million. That's a different environment, and it probably means we hold things together. Maybe we don't rally to $12, but we probably hold things together better than what the market may have thought, a couple weeks back.
Yep. All right, let's switch over and talk about what we see happening on the protein side. The cattle's had a pretty rough week this week, man. They've been battered around pretty good. This week they ended up at a 6-week low. Man, I guess as you're looking at that, Chip, is the whole time this whole year you've been on here, we've been talking about like there's all these external pressures that should be driving cattle down, but cattle kept coming up. A lot of that had to do with cheap grain, feeding stuff that was cheap. There's a lot of things out there moving it along. I guess the last 30 days have kind of shown some weakness, and we're starting to see that be more prevalent this week. As you look at the cattle market, are we heading into some turbulent waters here, or do you feel like this is just another one of those it'll bounce back type of things here in a little bit?
I think we're heading into some troubled waters a little bit. I'm a technical guy, I like looking at charts, moving averages, watching what the funds are doing. For as good as the corn chart looks, the cattle chart looks about as bad. Like you mentioned, multi-week lows that got beat up on Friday. Part of the problem is we've had a huge run higher, and the commodity funds have a massive long position built up. Now Trump won, stock market takes off screaming. Everybody's excited about the economy growing and all this boom that the United States is going to have, and that may be a fact, but I think the cattle market kind of ran out of buyers. Everybody that was bullish had been, long ago long. I think we reached an exhaustion level, and there's nobody left to buy it. And let's not forget either that part of the demand structure, and a pretty good healthy chunk of it, in our exports of, for sure, pork and to a lesser extent beef, a lot of that goes to China. So, if these tariffs come on, that's just another kind of, I guess, wound in the armor maybe of the demand side. And I think that as hogs have screamed higher, it's been at the benefit of some switching of demand out of higher priced beef to some lower price cuts like poultry, like pork, and I think that's been a huge benefit on the pork side. So I think the cattle market looks a little bit shaky in here. The good news is that cattle producers are whole. I mean, they have had a run, the run of all runs.
Yeah.
They've had chances to get stuff locked in on this go round and maybe the next one too at really profitable levels. And so I'm hopeful that a lot of them have taken advantage of that and not got too bulled up, because I just think technically we did not close very well Friday on cattle. The hogs have held it together better. I think that the demand is good, but China's a massive buyer of U.S. pork, so you got to believe that at some point that's going to come to a screaming halt. Assuming that Trump's going to implement some tariffs once he takes office, shortly after January 20th.
Yep. Everything points to that. He's said that, so there's not he usually does what he says. So
he does do that. He tells you what he's going to do, and then he does it. There's no waffling there.
Yeah, for sure. For sure. All right, so let's jump over now on the hog side too. You saw hogs kind of follow cattle today. They've been kind of following cattle there along the way. You talked about exports and stuff. A lot of that stuff going to China. Where's some bright spots right now you see on the cattle market or the hog market?
Well, demand. Again, I think that there's just been a huge demand. You look back and cash and cutout. Some days jumps $5, $6, $7. It's just been an amazing ride at a time when right through October and November should be the weakest point of the year on hogs, and we're at the strongest point. So it has been very impressive. I think, like I mentioned, that we're getting good demand domestically. We're getting a lot of shifting away from beef, higher cuts of beef, higher price cuts of beef down the chain. Whether that's pork, poultry, some other products out there. I think hogs have been a big benefit of that. But again, how much more can they go? We've got these mid to upper 80s we've seen for some of these fourth quarter hog contracts that it's just almost unprecedented. You typically don't see that. You've got summer months at historically high levels. I think it's given hog producers an opportunity to get some profitability. They've maybe been on the short end of the stick when you look at ag. The grain guys had a few good years on the back of some drought issues here and in South America. Cattle, the drought caused record high cattle prices and record low numbers on the cow herd. And the hog guys sitting back here saying, "What about me? I am struggling. I don't have the profitability." So you're finally getting some profitability back to the hog guy. Hopefully he was able to lock some of that and do some hedging. I wouldn't say it's not impossible to go higher, but again, I think the issues, the fears about what is China going to do. I don't know. I don't think it was correlated necessarily, but we had a horrendous week this week on pork exports. I think there was a net reduction of like 14,000 tons. Mexico and China were canceling, and so a little bit nerve-wracking there. Still up some decent levels. Funds have been long. I don't know how much higher we can go. I think you got to be pretty defensive with some sort of a put strategy that still keeps the top side open. But I think you got to play defense. It's been a nice run in the livestock markets here over the last few months.
Yeah. Yeah, when you're looking at what's going on there, there's a lot of things that are just kind of pointing towards that. Lastly, I want to talk to you about energy because I love talking energy with you because you got a pretty good perspective on that. When you're looking at what oil has done over this week, we're almost today. We closed West Texas closed at $70.33, down $2.03 for the day. As you take a look at those numbers there, oil has been in a weird cycle, right? I mean, therefore, we couldn't get out of the 60s, now we can't get out of the 70s, and then we couldn't get out of the 80s, and then fell back into the 70s, and it kind of just hung out there in the 70s for like the last 3-4 months, right? Feels like now we're on our way back down to 60s. So I guess your thoughts on oil.
Yeah, it's been a wild ride there for sure, and I don't know that anybody has a good feel for it, right? The easy answer is drill, baby, drill, right? I think
Yeah.
Trump's told you, as happened in his first administration as well. We're going to drill. We're going to be energy sufficient, energy independent. We got a lot of crude oil that we can pump and be self-sufficient and bring prices down. And I think he intends to follow through on that. And so that increasing supply perspective puts some pressure on us. The problem is we're also in the middle of probably one of the fiercest wars in the Middle East that we've had probably in our lifetime. Yep. And so there's always the potential you wake up some morning and something has escalated there. Iran is thrown into it. You just never know. There's always that potential. You just wake up, there's a flashpoint in the Middle East, and crude oil's $90 a barrel or something. So I think that's what's kind of pushed and pulled this market around. I think it does have a lot of implications for the grain markets. I think that if you push this crude oil market down into the low 60s or upper 50s, it probably is a little bit of a headwind for ethanol profitability, for renewable diesel. Obviously, if it pushes up into the 80s, it's the opposite effect, where it's kind of like maybe more of a windfall thing for renewable energy. But I think at face value, you got to believe that we're going to be increasing our energy production, oil production here in the United States very rapidly, very quickly, starting early in January, and crunching through for 4 years, and that will tend to keep a little bit of pressure on the market, I think, in the short run. But I think maybe we're in this wild range for a little while of mid 60s to mid 70s, and keeping everyone on their toes, not knowing whether we're going to see a flashpoint in the Middle East. Now, I would tell you that if Trump gets in there and then in short order there's some sort of peace agreement in the Middle East, ceasefire, that type of a deal, on top of our growing production of oil here, that could probably get pretty bearish for oil. Put it down into the mid to lower 50s maybe, if that were to happen. So I think it remains to be seen, but you gotta worry about, from a grain perspective, lower energy prices, and certainly that would be like a tax cut for the consumer. It's just one of the biggest things in everyone's pocketbook, mine included, is filling your car up. When it's $4 a gallon, it's painful. When it's two something, you're like, wow, this is nice again. So that's going to drive things going forward.
So I want to throw this out there because it was, Biden early on sold 180 million barrels of oil out of the strategic reserve. Since then, but this is back in August. I was trying to research this beforehand. The only thing I could find was back in August. But as of that point in time when this article was written in August, there's 56 million barrels had been put back in, right? And that means there's another 124 million barrels they got to put back in there. Now, art of the deal, type of thing here. We start looking at some of the stuff goes down. What do you think the outside chance of Trump coming in and saying, like, okay, cool, oil's at $60 a barrel right now, I'm going to go buy 124 million barrels of oil and put it back in the strategic reserve, and all of a sudden the price of oil jumps back up?
I think he'll be more measured than that. I think that will be probably a priority, and so maybe that helps balance the oil market a little bit initially. Will end up maybe being one of the better trades of all time, although I don't think I think the previous administration bumbled into that, if that's the right word. But yeah, I think that will be a priority. To your point, I don't think it's just a snap, let's refill it all at once, but it probably does help cushion it a little bit, maybe keep oil prices from falling that far super fast. But it'll be a push and a pull for sure. And I think that's a good point. I think he will be wanting to do that slowly over the course of time. And, hopefully that can be accomplished and before there's some major crisis where we need it.
Yeah. I've been thinking about that because that's just one of those things where, he knows how to play the game and he's done it.
Oh, for sure.
Buy low, sell high, but I mean, it's not like this is the first time where they've been able to make this epic of a deal. I mean, when they bought it at 95 and it got down to $56 a barrel at one time, and they could have easily, I mean, that would have been like,
yeah, that would have been probably the world's greatest trade,
right? Yeah,
to be honest, and but they didn't do it.
Yeah,
they didn't do it.
So now we're flirting around, like you said, we're at 70. We'll continue to see what happens, but from a measured perspective, like you said, if there is some pressure on the oil market somewhere, this is one of those deals where the government can jump in and buy 10 or 15 or 20 million barrels of oil and kind of make the market do various things.
Yeah, and let's not forget either. I'm certainly not an oil expert. I'm more of a grain and livestock expert. But it's been 4 brutal years. Against the energy producer, the oil producer here. And it's not like you just go out and turn a key and all of a sudden, we're pumping millions of barrels of extra oil. So it's going to take, it's a process. It's going to take a while to get this production back and flowing. It won't be like Trump comes in office in mid-January and by February 1st, we're at all-time high oil production in the United States. It is going to be a process. It's going to take months to years to get that back. And so, it will be measured. It's not like, one crop season, we can double our carryout. I don't think it's quite that easy on the energy side, but that certainly was his plan in his first term. And he's been very vocal that that's going to be his plan in his next term. And so I think that's the trend. By the time he leaves office, it's probably going to be fired on all cylinders and we're going to be pumping a lot of oil. But it's not like February 1st, we're just going to be back to full strength because a lot of that was shut down. It just takes time to restart that, get the infrastructure back and the people back. And it's not an overnight process. So
right.
It just won't be like we wake up in January and crude oil is back at $45.
Right. Yeah, for sure. For sure. All right, Chip, good stuff as usual. Folks want to reach out to you, get more information about what it is you're doing over there at Blue Reef Agri-Marketing. What's the best way to do that?
Yeah, best way is just call our office in Morton. It's 309-550-7213. We got wild markets. We've got lots of opportunity. We got lots of opportunity to mess things up and have it go blow up in our face too. So if you need some extra help, need an extra set of eyes and ears, we'd love to talk to you. So just give us a buzz.
Right on. Chip, appreciate you being on the podcast, man. I'll catch you again next time.
All right. Thanks, Casey.
Right on. I'm Casey Seymour with Moving Iron Podcast. Check me on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Check out the video version over at the YouTube channel, which is the Moving Iron Podcast YouTube channel. And you can also check out everything Moving Iron related at movingironllc.com. So with that, I am Casey Seymour with Chip Nellinger. Let's go move some iron, folks. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving